you look at this, even from the breakout at the top here, 137 pips. Nice move, easy to grab some profits out of that. Let's take a look at the second area over here. I think I've done so many of these videos, I apologize. We'll take a look at a second area here. Now this is a time when the resistance level actually held. You can see these two spikes here. Now I'm not going to BS you and try and say, hey, look at this, you could have traded up here and up here. You know what? These are very difficult to trade. Spikes are very hard to trade because unless you're an aggressive trader and you go short right on the line, generally there's not a whole lot of chance to get in, because when you look at this area on, say, a 15-minute bar, you'll see that there are very large bars because there's momentum in here. But these tell a very important story, and what they say is that the bulls are weak and the bears are strong. And if the bears are strong, then that means, hey, if price gets back up there inside of a few days, I like to use a week, so 5 days, 5 trading days, it's more than likely going to hold. That's what I think. Okay, but remember, I'm going to be on the lookout to see, well, hey, what if it doesn't? If the market, if resistance is not going to hold, what's that going to look like? Remember, we already talked about that over here. You're going to see a bullish wedge. You're going to see the market making a flag. You're going to see the market making a pennant. You're going to see triangles. But more importantly, you're going to see that the market just cannot break back down. That when the market tries to get back down through there, it holds. So, if we're looking at the market here, and we're seeing it spikes up, let's take a look at the market as it approaches the line again. So here we see the market making a move up. First thing you want to notice is that there's not a lot of momentum as the market comes up here. The momentum stops well short. Okay, this is about 97.14. We're down here at 96.80. That's a big range. So the momentum is stopping well short of the line. As it starts to push up, you notice that the market is not closing on the high. So we see the momentum is dying off. Now look what happens. 4, 8, 16 hours, the market cannot close above the line. Okay, this is where we can start to look for, or even actively open up a trade. And either trade when the market comes up to this line. We can go down to our hourly bar and look for a particular type of pattern. This is where you're going to start to see, your flag pattern come into play. And then we can trade the break on that. Okay, remember, breaking it down to if, then. So if I see a flag pattern, I'll wait for the breakout. If the market comes back up to this high, then I'll go short. Okay? If, then. So let's take a look. If the market's going to hold here, we're going to see that the market is going to close off of the high. It's going to close below the line. We're not going to see higher lows. We're not going to see higher highs. So now we can see. Look at this. Market tries again and again and again. We've got 1, 2, 3, 4, 5, 6, 7. We've got 7 bars here. So over a session, 1 full day, that the market cannot break through that line. Very good indication that resistance is holding, and we've got a potential trade. Here's the goal, or the objective is down here. Again, we're open to the idea. What's going to happen if the market what's going to happen if the market is likely to go up? Well, we're going to see the market form what? Probably a bullish wedge, meaning that support is moving higher while resistance is staying the same. Okay? And we see that just doesn't happen. Now, truly, you don't want to get focused on this short term here. Yes, you saw that the lows were getting higher, but don't discount the other trading. Okay, you're still basically looking at a box here, not a triangle, and not a wedge. That's something very, very important. You don't want to discount the past trading and just focus on what really amounts to just 3 bars and expect that to,